Hello, everyone, and thank you for joining us. Here is our agenda for today. It has been about 90 days since our last webinar. Over this time, we have experienced some positive trends and some concerning trends as we head into 2022. Today, we will share with you what we are seeing and how GEON continues to work towards solutions to these challenges. Before we get started, let's take care of the legal statement. The information presented in this webinar does not constitute commercial, investment, financial, legal, or tax advice in any way whatsoever. All opinions are the presenter's own. Nothing in this webinar constitutes a recommendation, and nothing presented should be solely relied upon for making decisions for your business. GEON strongly recommends that you perform your own independent research. In economic news, the Department of Labor has announced the U.S. economy added 467,000 jobs last month. This brings unemployment to approximately 4%. Another important indicator of economic health is the sale of new homes. In December, the sales of new single-family homes were at a seasonally adjusted rate of 811,000 units. This is 11.9% above the adjusted November estimate, but 14% below the December estimate. Another important economic indicator for our industry is the Manufactured Durable Goods Index. In December, new orders for manufactured goods decreased $2.4 billion, or 0.9%, to $267.6 billion. This decrease follows two consecutive monthly increases and a November increase of 3.2%. Turning our eyes to the semiconductor chip situation, we see the automakers including GM, Ford, and Hyundai predicting the chip shortage to ease by the second half of 2022. Unfortunately, the chip makers forecast a supply squeeze to persist into 2023 despite production increases. Before we move into raw materials and logistics, we wanted to remind our customers that GEON continues to invest in order to ensure continuous supply. In July 2021, GEON announced significant investments in additional new state-of-the-art equipment to enhance North American capacity and innovation capabilities. This new investment will allow GEON to deliver even greater reliability and options for production. The expansion is delivering 120 million pounds and is nearing completion at the company's facility in Dyersburg, Tennessee, and will be operational in Seabrook, Texas by Q2. This announcement comes at a time when the petrochemical industry is suffering from raw material shortages due to Winter Storm Uri that caused electricity outages and plant shutdowns on the Gulf Coast. GEON, having multiple facilities across the country, helps customers to navigate their supply issues. Turning to raw materials, as we mentioned in November, the supply chain disruptions continue both globally and domestically. Global supply chains have still not been able to catch up from COVID and other 2021 weather-related events. Many of the chemical precursors used to produce PVC and PVC additives remain globally short, creating additional challenges for domestic producers. In 2021, many suppliers to petrochemical and plastics industry were on force majeure and/or sales allocation. Going into 2022, many of these remain in place. Suppliers are plagued with feedstock shortages to produce their product and are supplementing with offshore options. With minimal improvement on vessel space, port jams, and challenges moving product from port to inland sites, the supply chain is taking its time to get a stable position. High backlogs of orders are keeping suppliers busy and in sold-out positions for many additive products. Because of continued strong demand and unbalanced supply, we are still seeing raw material inflation moving upward compared to pre-Uri levels, although some slowdown is being observed for limited materials. PVC has seemed to stabilize from significant increases in 2021. CDI has forecasted January 22 to decline by 3 cents per pound. This is based on lower export pricing. Yet domestic demand remains strong, and feedstocks such as chlorine have decreased versus December 21. Some areas such as tin stabilizers and lubricants are seeing more inflation due to recent supply challenges with PMC and Lonza. As you know, many of our raw materials are derived from crude oil. WTI crude is currently forecasted to stay at or near $90 per barrel as consumption remains strong. PVC resin, one of our major raw materials, increased in price by 31 cents per pound in 2021, according to CDI. With export pricing declining for the third month in a row, CDI is using this for basis to estimate 3 cents per pound decline in January 22. PVC producers have countered this with a 3 cent per pound increase for March, citing continued strong demand and rising costs in chlorine, freight, and labor. Other raw materials, such as stabilizers, plasticizers, and modifiers, continue to be tight as suppliers try to reduce their backlogs. Raw material feedstocks used to produce these products remain globally short, causing challenges for domestic suppliers. Overall, the forecast is to see some stability in pricing into late Q2 2022. So let's review the strategic actions GEON has put in place to ensure supply for our customers. In 2021, GEON qualified 136 new raw materials or suppliers to ensure continuity of supply for our customers. This includes a higher level of imports, which we continue to balance due to the maritime challenges. We have daily cross-functional reviews to proactively monitor supplier shipments for on-time deliveries and additional qualifications that may be needed. We have increased the number of formal contracts in place with our strategic suppliers, from PVC to additives such as stabilizers and modifiers. In addition, we have negotiated increases in supply going into 2022. We have added a sourcing resource in China to improve our visibility and options for new sources out of China and Southeast Asia. The current focus is on those materials that have a high level of global tightness, like tin stabilizers and modifiers. We are also maintaining the collaboration across the SK portfolio on supply options and alternate solutions. We again expect the tight supply to continue into Q2 2022 for most materials, with some materials like tin stabilizers and acrylic modifiers remaining tight into Q3 2022. On the logistics side, in order to keep up with increased demand for containers, container factories are expected to create 5.4 million 20-foot equivalent units of containers in 2021. Compared to 2.8 million that were produced in 2019, that's a significant ramp up in output. Further, on the impact of trucking, the trucking industry employed 3.6 million truck drivers in 2019. When you include those employed in jobs related to trucking activity, that number rises to 7.95 million, about 5% of the entire employed population in the US. There's one port that dominates, the Port of Los Angeles, which handles 20% of all incoming cargo for the US. In 2022, the port handled 9.213 million 20-foot equivalent units. Let's cover the shipping market outlook for containers in 2022. Container fleet growth is expected to increase 4.5% in 2022 and 7.5% in 2023. The container market demand and supply balance looks stable until mid-2022. But with continued pressure on rates, we may see a dip later in 2022. The rates in the chart below show the impact in 2021. Now the logistics outlook in 2022. Freight spending for Q4 was up 8.4% over Q3 2021. The Cass Freight Index saw a 38% rise in 2021, and the forecast for 2022 shows about 25% increase. Continued strong freight demand and tight capacity will keep the indexes pushing higher in 2022. We can expect a continuation of inflated freight costs across all modes: LTL, TL, rail, and bulk truck. We saw a tremendous uptick in diesel fuel in 2021. EIA expects diesel to fall in 2022 and 2023. So given this, what has GEON done? In 2022, we partnered with a new 3PL that provided us with enhanced track and trace capabilities. We have explored customer enhancements as market conditions improve on the raw material side. We continue to improve network and carrier capacity while balancing contract and spot rates, and we've made a heavy push toward on-time in full improvement. There remain many factors still challenging our industry. Raw material prices and availability still remain volatile, and logistics will continue to be a tough market in 2022. The chip shortage is forecast to ease through 2022, helping the automotive industry recover. GEON has taken strategic actions to access materials in order to keep our customers operating and continues to invest in capacity our customers have indicated is needed. We ask our customers to keep an open dialogue with GEON on the challenges you face. It is through open dialogue great results can be achieved together. We hope this was informative and helpful. Thank you for joining us today.